These are 12 of the best Canadian growth stocks right now for 2025. They've beat the market and combined earn more than $18 billion each year. In this video, we're covering all of them from the smallest to the biggest moneymakers to save the best until the end, starting with number 12, IMAX. I bet you didn't know this was a Canadian company, but the movie technology business is a $1.2 billion market cap. It trades under its namesake ticker symbol and is just $3 off of their 52-week high. The last super investor who owned the stock was Prem Watsa. He sold out at the beginning of 2024. Today, IMAX trades slightly below their historical sales and they're above their earnings and their cash flows. This can be expected with some of the companies we're looking at on this list. Their GF value comes in at $21 per share, which is just slightly below today's stock price. It seems like IMAX trades in line with about its fair value. We're looking at Canada's top growth companies. Most of these businesses are growing quickly and building their moats. They're also bringing in huge amounts of money, meaning that they may be interesting companies to look at. Plus, there are some themes on our list that are gonna stand out to you and may surprise you. Keep in mind though, the video isn't financial advice. It's not a buy or sell recommendation of any security. Use common sense and do what's right for you. Now, let's keep looking at our list. Then next at number 11, we have OpenText. This is a $7 billion business that's trading at its 52-week lows. This software company creates an information management platform to help companies search through their data. Right now, this business may be priced cheaply. It's trading at half of its historical sales and they're way under their projected free cash flows or even their Peter Lynch value. OpenText has a GF value of $49 per share, nearly double today's stock price. However, this comes with a possible value trap warning. That's part of why no super investors own this stock today, and Lee Ainsley was the last one who sold out of it at the end of 2023. Then cracking the top 10 at number 10, we have Bausch & Lomb. This trades under ticker symbol BLCO. It's just under a $7 billion market cap that's trading in the middle of its 52-week high and low. Bausch & Lomb is one of the largest vision care companies in the world. It was spun off just a few years ago to become a standalone company. Right now, Carl Icahn is the only super investor with this stock in his portfolio, making up just a 0.7% position. This stock hasn't been in the market that long, but today it's trading about $3 below its GF value. This could mean it's slightly undervalued. Stock number 9 is Gildan Activewear. Yes, it's a clothing company, but it's the first of a couple on our list. This trades under ticker GIL, and it's a $7.5 billion company that's at its 52-week high. Gildan is owned by one super investor, and that's the great Brian Lawrence of Oak Cliff Capital. This makes up a staggering 14.5% of his portfolio. He first bought the stock at the end of 2022, and since then it's nearly doubled. However, today the company looks like it's out ahead of its historical sales, and they're priced well above their Graham number or their projected free cash flows. Those numbers contribute to a GF value of $39 per share, which is down $10 from today's stock price. The next stock on our list at number 8 is Descartes Systems Group. This is a $9.5 billion company, down $9 from their all-time high and trading under ticker symbol DSGX. Descartes is a software company providing shipping and logistics SaaS. Descartes' been a long-term compounder, and from their lows at the beginning of the 2000s, they're more than a 100-bagger. Despite their strong performance, no super investors own the company today after Lee Ainsley sold out of it in the middle of 2024. Today, though, the company looks like it's trading well above their historical sales. They're also way out above their DCF models on either an earnings or a free cash flow basis. Their GF value only comes in at $102 per share, down 12% and $12 from their current stock price. Stock number 7 is Boyd Group, trading in Canada as BYD. No, not the Chinese EV company, but they do operate in the automotive industry. Boyd owns and operates auto collision and glass repair centers. This is another stock that's a long-term compounder and one of the top performers in the market since the global financial crisis. There are, however, no super investors who own this business, even though it's priced below their historical sales, at about their projected free cash flows, and way down from a DCF model. Boyd Group's GF value is around 300 Canadian dollars per share, up significantly from their current stock price. Stock number 6 also trades on the TSX exchange. This is Dollarama, ticker symbol DOL. The $38 billion company is Canada's largest dollar store chain. It's also performed very well from the global financial crisis onward. Their numbers may be more ahead of themselves as they're trading above their historical price to sales and they're out above their earnings or their free cash flows, though there are some lofty growth assumptions with the DCF based on their cash flows. Dollarama's GF value comes in at $110 per share. That's $26 and 23% below their current stock price. Now entering the top 5, we're back to the US exchange with Lululemon Athletica. A pioneer in the athleisure market, it's a $46 billion market cap trading under ticker symbol Lulu. Today, it's in the middle of its 52-week high and low. Lululemon's owned by two super investors, Lee Ainsley and Francois Racone. Both of them have around 1.5% of their portfolios in the company and bought in the last quarter. Lululemon trades below their historical sales and they're just slightly out ahead of their Peter Lynch value. They're also way ahead of their projected free cash flows, but they're below their DCF analysis. Their stock price has rebounded sharply to start 2025. Today, however, it still looks like they're priced below their GF value of $484 per share. At stock number 4, we have Alimentation Couche-Tard. This is one of the largest convenience store chains in Canada, and it's a $50 billion US market cap. The stock trades in Canada under ticker ADT. It's another historical compounder, being more than a 100-bagger from when it went public back at the end of the 90s. ATD is priced right at its historical sales, and they're just slightly above their projected free cash flows. That's pretty decent for a growth-based company, and they're well below their DCF based on their cash flows or their earnings. Today, their GF value comes in at 85 Canadian dollars per share. That's up $10.12 from their current stock price. Now it's time to get into the top 3. At number 3, we really have one of Canada's strongest growth companies. This is Constellation Software. The vertical market software conglomerate is a $62 billion US market cap. It trades in Canada under ticker symbol CSU. This is another stock that's been one of Canada's all-time compounders. They went public at 16 Canadian dollars per share and they're trading for more than 4,000 today. It's harder to know which super investors own Canadian stocks. For Constellation, we can see their US-listed ADR is owned by 3 super investors today. This is led by Sequoia Fund, making up a huge 7.7% position, which they started at the end of 2014. However, there are some lofty multiples on this company, and they're trading ahead of their historical price to sales. They've also been pretty established, and they're well ahead of their projected cash flows or their earnings. Constellation's run by their legendary CEO and investor Mark Leonard, and it looks like there's a lot of growth being priced into the future of this business. They're disciplined capital allocators, and a GF value comes in at 4.4 thousand Canadian dollars per share. That's just slightly above their current stock price. The Canadian growth stock that's number 2 on our list is Brookfield Corporation, trading in the US under ticker symbol BN. The $80 billion private equity company is down $6 from their all-time high. Right now, 6 super investors own Brookfield, and this is led by Josh Tarasoff and Bill Ackman. It makes up over a 10% position for both, and Chuck Akre has nearly 8% of his portfolio in the company. Both Akre and Ackman added to it in the last quarter, and Daniel Loeb of Third Point Capital started a 3.5% position. The private equity company has performed very well for investors, institutions, and their shareholders. But today it looks like their GF value only comes in at $42 per share. However, there is a lot of growth still being priced ahead for this business. Now, are you ready for the number 1 Canadian growth stock on our list? This is none other than Shopify, trading under ticker symbol SHOP. The $134 billion e-commerce giant is down $18 from their 52-week high, up more than double from their 52-week low. Despite a huge rebound in their stock price, just 2 super investors own this stock today, and this is led by Poland Capital Management with a 4% position. They did add significantly in the last quarter. Shopify has a pretty gut-wrenching stock chart, and they still trade down 39% from their all-time high hit back in 2021. We can see the lows the company hit at the end of 2022, which today they're trading 4 times above in just 3 years. But their GF value is only $85 per share, so that's below their stock price. Let me know if you want to see a future video on any of these businesses. If you enjoyed the video and you want to support the channel for free, click the first link in the description. That will take you to Global Values affiliate Interactive Brokers. Thanks for watching and have a great day.